Well, good evening, everybody. Welcome to your Intermediate Traders Clinic for today. We're all about measuring trading performance. I hope you're all well on this very cold. Hello again, David. This very cold evening in Perth. Good evening, Wayne. I trust you can hear and see me okay, guys. Yeah, Ross, you'll hear the words Trading Journal many times. Okay. So let's get kicked off. As I said, we're all about, I'm just making sure you can see everything. Yep, you can, all good. What we'll start by doing, I think, I hope you can hear me okay. I'm just going to close down a couple of things. So if you just hang on a minute, I think I might be just stretching the bandwidth a little bit here. So let's just go into, just close some of these. Futures are looking a little shy, but not too bad, and better than they were earlier for sure. There we go. Just close a couple of things down. All good. That should be better. That should be better. Okay, so right, let's get things kicked off. Obviously, although it's more a theoretical session than perhaps some of the other sessions that we run, and there's a couple of good trades happened this morning that we looked at. Remember, of course, that anything that you see or hear is my opinion only, shouldn't be taken as gospel, but rather you do your own due diligence and decide whether it's right for you or otherwise, and then you can put things into practice that you think may be worthwhile doing so, or at least give them a try. All good. Just checking on, seeing who's here. Thanks, Wayne. Hi, Alison. G'day, Michael. Hi, Rachel. Yes, we're playing. We are. Good stuff. Okay, cool. Right, let's get things kicked off. Okay, so how trading results occur. This, of course, comes from my latest work on Trading IQ from traderiq.com.au. And really, it's critical to virtually everything that we've been talking about in this Intermediate Trading Clinic and beyond, in that we have a stimulus, which is the market action, and we need to make some judgment calls on what's happening. So interpret what's happening, and then obviously put the work in to develop some trading systems and trading, including trading plans and trading journals, of course, and that took me no more than about 3 minutes, I think. And then, of course, I need to make decisions, we need to take some actions, and ultimately we'll get results. So, hello, Leanne. So ultimately, of course, this is the process. So if this is the process, this is why I often say 80% of your success, or otherwise as a trader, is what's between your ears, not what's the market showing you. And from that come 3 IQs. So market IQ, which is that knowledge you need, that interpretation of what's happening in the market, which help you check out what's going on, which help you make an assessment of risk, so you can position size appropriately, means you can choose the right strategies, the right time frames, etc. Then the systems IQ, it's the creation, it's the testing, it's the implementation of trading systems, including plans, measurement systems, which obviously are critical in terms of what we're doing here, and other trading business systems that we could talk about, and we have talked about at other times. And then our decision making accordingly, which combines the emotional and thinking aspects of any decision, and subsequently allows us to integrate our market and systems IQ in the reality of entry and exits. So hence, therefore, if this is the framework, and this is why I'm starting here, if this is how results occur, then really logically we should be measuring things at all of these levels. If you don't measure, let's start with that. Let's start with if you don't. So if you choose to rock up to this session and don't do anything about it, hi Shane, then the reality is that you're not going to have the evidence that what you're doing works. You're not going to have the confidence to make decisions about what you're supposed to do in terms of managing risk, etc. You've got to be less disciplined. You're going to have a failure to believe in your plan, a failure to know what you need to change to improve outcomes, and ultimately, of course, what that results in is an inability to meet your trading purpose. You've all got a trading purpose for trading, be it replacement of income or growth of capital, so you can take out a lump sum and spend it on your round the world trip when everything opens up, or whatever it is you want to spend, so you can say, my trading paid for that. If whatever your purpose is, then you don't measure your trading to get the evidence of what you're doing is right and make the changes that you need to. And you continue to do what most traders do, so don't measure anything beyond the profit loss of any single trade or your account balance, then that's the consequence. It's a choice. Alternatively, of course, you could measure some stuff, create a strong weight of evidence that you are working as an optimum level for you as an individual trader across all those domains, or at least moving towards that. Get the increased confidence that makes trading discipline easier. Make considered decisions about potential changes to your plan and process to improve trading outcomes. Have an emotional calmness in the market to facilitate better decision making, and ultimately, of course, a belief that you could do this for a lifetime, meet your stated trading purpose and objectives. That surely is a choice you need to make. So my role here today, is to convince you to get off your backside and measure your trading, okay? Beyond PL of any single trades or a simple spreadsheet that says I've had a few wins and a few losses, and these are my PL results of that. I can't stress it enough, okay? It's so important. So remember, this is one of two sessions, okay? So the first session, we're going to talk about some broader stuff, and then in the next session, we're really going to get down up close and personal and start to poke a few buttons, okay? But bear in mind, this comes from a nurturing place, of course. And again, to put it into context, this is second of 3 clinics, 3 intermediate trading clinics. The first one, which I know many of you attended, was on trading plans, and how to create those. I hope you've all followed through and now have whiz-bang trading plans that are starting to serve you well. This, of course, is the next step. And then, of course, we're looking at psychology, and then we're looking at trading development as our fourth in this series. Why is confidence so important in your trading decision making? Well, really, it is the bottom line, critical emotional state that's going to influence your ability positively to take appropriate action. Not only action in terms of direct trading action, so entering at the right time and exiting at the right time. We're talking about this tomorrow night, actually. If you're not registered for tomorrow's webinar, we're going to look at one of the key things, which I think is quite important. On promotional and preventative biases. So there's tomorrow's session. Let me just share this screen. If you're not registered for this, I'm going to put this into chat. So if you're not registered, you can get along to it. There you go. It's in chat now. So get yourself along to that, just as a side issue. So confidence is based in terms of, if confidence is so important, it's based on a set of beliefs related to trading. First of these, and we'll cover this in module 2 of the Trader IQ course, but it's all about what we term self-efficacy. And we're going to delve into this in a little more detail in that psychology session next month. But it's the confidence that you have the ability to do what it takes to be a trader. So it's confidence in self or self-efficacy. Secondly, you've got confidence at taking a specific set of actions as a result, or as the potential to create improved results. So if I say, do a journal, and then intermittently you review your journal, and you can start to see some common threads that you may integrate back into your plan, then that creates a confidence in your plan. If you get result after ordinary result after ordinary result, then you never get that confidence in your plan, so your temptation to move away from it, to exit early, to enter late is that much more magnified if you haven't got the confidence to follow it, even if you get a succession of wins, a succession of losses. And confidence in your trading systems that if you follow them, they're going to produce positive results. So that simply is the bottom line. Now, the only way that you can develop these confidences is to measure what you're doing. Creating a weight of evidence to say, this is working for me, this is working for my trading business, whether you're Wayne or you Ping or Stephen or Shane or Alisa or Andrew or Anne or Attila or Ross or Barry or Bruce or Cameron or any of the other guys that are here, David, Dean, Deborah, Ewan, Jean-Francois, Kevin, Leanne or Linda, it's going to be the same for all of you, okay? If you create a weight of evidence that this is working for me as an individual trader, your confidence will soar, your results will mirror that. But you can only do that through measurement. So let's start our look at measurement by just having a quick look at the psychology of results, because results are what we base our well-being as a trader upon. It's the way we're wired to think, so there's no point in battling against that. It is what it is, okay? But what I want you to do is a couple of things relating to this. Is when we look at a result, we tend to look at our account balance, and we tend to look at that and look at that only. And maybe the PL of any open trades we've had or those have just closed. But really, when we look at our key numbers and our result performance, what we need to do is get underneath what creates that results. And so these key numbers are not only things like win-loss ratios and average win versus average loss, which we're going to talk about in a moment, which you should be measuring, but also, if you like, your key business numbers, which I'm also going to mention as well. And the importance of measuring these is to offer guidance on the areas to focus on in your development. So for right now, I want you to forget about making money out of markets and use your results as something entirely different. Because as a developmental trader, your results serve the purpose of saying this works or this doesn't work, or I work doing this or I don't work doing that. Nothing more, nothing less. If you're starting out, if you're developing as a trader, you're not in a position yet where you can score those big hits on a regular basis. We need to move towards creating systems and processes and behaviors which result in a reliability of results. Hence, the way possibly you should be looking at your results now are as a barometer to the impact of putting the things in place to achieve this primary role of reliability. Because if we get this reliability, and what I mean by that is if you can get $20 a trade as an average over a period of time, then you know exactly what you're going to have to do to increase your dollar return, and that's simply increase the size of your trade. If you can do that ad infinitum, you're trading one micro lot, you get $20 a trade as your average win, $5 a trade as your average loss. You start trading one mini lot and you're 10 times. Now you're at 200. You start trading a standard lot and you're now at 2,000. Now there are issues that go along with that. We'll talk about those at a future stage, but in fact, I may mention them along the route. But this is a major mind shift. So what I want you to do is utilize, as you're in your developmental stage as a trader, use your results as a barometer for what's working, what's not, and what you need to work on going forward. For this session, we're going to look at three key things. Hello, Manners. I haven't seen you for a while, buddy. We're going to look at three key things. We're going to look at your 4 key business numbers, your results barometer, so your win-loss ratio and your averages, and your system performance, which of course is all to do with journaling. Now, as I said, and we'll look at some of these next time, arguably as important because they all contribute to these. We can have measurements of our developmental or development, our learning process, the quality of systems, decisions, and direct mindset assessments such as self-efficacy scale, which is one of the things I've developed for Trader IQ. But let's start with these first three, and then we'll sort of smash things home when we next meet next time, and in fact the time after that as well. So let's start by looking at just how it sort of works, and this is why it's so important. So we have a primary trading system, and we have an entry subsystem, a capital risk subsystem, which includes our initial stop and our position sizing, and then a profit risk subsystem, which includes our profit targets and our trail stops. So we've got our system in place with all the little bits and pieces that go along with that. And then once we've got that in place and we're trading it religiously, then we can start to measure things against that. We decide what we're going to measure and with what, and then we can get some results, action plan, close the circle, and alter our system accordingly. It's really that easy as a process. Now, the other thing that's worth mentioning is managing our result transitions, and this is an important concept in terms of your experience. Some of you are on your startup journey, and hence will be at stage one, and stage one really is where you first start to dip your toe in the market. Okay, where you've got your demo platform, you start to trade, you may even move to a live platform, and really the purpose of a demo account is really to plant your flag in the system and start to trade it. Transition 2 is where you create that trading system, and as I say, create that reliability results. Even if it's $1 average profit, then that's all you're trying to do. You're trying to create some reliability, and then you're in a place of scaling. And once we're in a place of scaling, then we can capital trade higher volumes, trade higher position sizing. We should only do this when we start to have evidence of reliability. So that reliability of results when we measure our trading is really important. Now, what that reliability looks like, it's certainly not we win every trade. It's certainly not that a particular part of that measurement is better than another. But as we move towards a scaling, we need to be aware. I don't know why I need to a little bit of an issue there in terms of the slide. It's but one thing I talk about sometimes is what I would term a bigger game feeling, and it's when you start to scale up and you have to get used to the bigger amounts. So it may be that your average win is maybe $60 and your average loss is $20 when you start out. Well, when you scale up, then if you scaled up from a micro to a mini lot, for example, then it would be $600 and $200. That takes that's a big psychological leap. There are ways we can do to overcome that, but I'll show you that in action in a little moment, okay? So as we work through these three transitions, you need to know what you're aiming for. Now, let's get on to some measuring stuff. Now, what I've done, because I'm a nice guy, is I've put in the handouts, a handout of this, okay? So you can, and it looks something like, it'll come up in a minute, hopefully. There it is. Looks something like that, okay? So I'm going to go through this and let you know how it works, and if it's useful, fantastic. If it's not, then no worries. But really, when we look at our trading results, we can look at the number of trades we place. We have an average profit loss, and that creates a turnover. Then we've got some trading costs. So this may be courses, subscriptions you're doing. It may be coaching you're doing, maybe anything like that. And that creates a total profit. And then if you want, you can measure your hourly rate as well by putting your trading time in. So this is all good. Now, if we change these, let's just change this up to 6, and let's just change this to $65, okay? So we've only improved our profit loss by $5 and upped our number of trades, and you can see spending exactly the same time, but you can see we've got 40% growth on our total profit. We've moved from 220, let's say this is a week, to 370 a week. And now we've got an hourly rate of $52 an hour, which is much better. If we make small changes across them all, so we keep that at 6, we make that 72. Let's increase our costs. Let's up that to $70 because we've taken out a, let's up that to 82, 83, say. We've got a $50 subscription to Trader IQ, whatever, and then we decrease our hours by 6. Then we've now increased our hourly rate from $31 an hour up to $71 an hour, and now we're in a good place. Okay, so if we keep an eye on these key numbers, then these are a good, it's something we wouldn't do a lot, but it's something that we'll do from time to time just to know where the state of our trading business is. So you can download that and have a play with that, okay? So even small changes to all of the numbers can make a massive difference. So how can we work on these? Well, let's so a number of trades, it's simply a matter of doing what we're doing, but we're investing a little bit more time just to have a look, or we get more efficient at spotting opportunities and we take them. A couple of things to watch out: watch the margin if you're using extra trades. Also consider how many trades you can manage at any one time. I found myself up with 14 open trades last week, which became unmanageable when the market decided to upset itself. So I closed them down simply because, from a risk management point of view, I was concerned I couldn't keep a close eye on them all. You should also, again, just related to that, when you can see the market risk or make a judgment that the market risk is increasing as it was last week, then really you should be very, very cautious about upping the number of trades you're taking. Far better to keep your cash on the side until market conditions are in a good place. With your average profit loss, first question is, of course, am I following my system? And your journal should tell you that, which we're going to talk about soon. And how well is my system working, and the tweaks that we may need to make to improve outcome. Then trading costs. We want any trading cost to improve our immediate or our longer term profit loss. And then our hourly rate, we can start to do a time audit and all of that stuff that we've talked about before. So less time with the same result or more time with a better result is what we're aiming for. Okay, so there's your big key business numbers. So of the other business numbers, which I haven't referenced, and I don't know why I seem to have lost the slide here, is your average, your win-loss ratio and your average loss and average profit. I'm going to show you the real deal here, okay? I'm not going to mess around with this. There's a couple of things I want to show you because of this. Yeah, that's cool. Right, first thing I'm going to show you is this, okay? So it's going to run a quick report so you can see that it's live and it's real and I'm not pulling figures out my backside. Report. There we go. Replace the one we previously did. Okay, so this is now. You can see it's just come up now, 1826. That's obviously Perth time. And you can see it also is from essentially the end of December. Okay, so it's for the last 6 months. Right. So all of those results create this. So there's 721 trades included in that. Okay. Now, key numbers. Okay, first thing is you obviously want to see this improvement. So we're down here in December and we're up here now 135,000. Okay, so this is a very aggressive account. Okay, the aim is to have to trade lots, to have a strong win-loss ratio and keep that average win, average loss within a reasonable range. Okay, so there's 3 or 4 things from this I want to point out. So it's 2/3 to 1/3 win-loss ratio, almost dead on. Okay, average profit, average loss, that varies depending on the month. This month has been a choppy month, but still moved up, and that's pushed that up a little bit. So at this stage, I just need to have a quick look at an average loss. There was a couple of things that a couple of mistakes I made that pushed that up a little bit, but that's okay because this is still intact. So you don't lose confidence on that. Now here's the other one: maximum consecutive losses 7. Okay. Versus 17 consecutive wins. Now, that's a real, there's a couple of things relating to that. First of all, if you've got this equity curve, then that creates the confidence to brush that off, to be resilient with it all. But secondly, it actually sort of says, hey, look, I just need to take a step back, see what's going on here. Now that's only happened once, but it's not uncommon for 4 or 5 losses to happen at this, in a row. So there's a few things to look at there, and that's simply done by a report you can run off MT5. And these are all key numbers. So you should know these. You should be having a look at this at least once a month, just to say, hey, look, this is where I'm at. Okay, now, I mentioned scaling before, and I just want to point this out, okay, because this is important. Now, my risk percent on a share CFD is 2%. Okay, so this is right on its stop. TWE is right on its stop now, and that's okay. If it gets triggered tomorrow, it gets triggered tomorrow. But if I didn't have this size of account, if it was a $13,000 account, remember, of course, these will be a tenth of the size, and therefore that will be $62, $12.49, $90, and $228. So that's what I mean about getting used to these big numbers. If you're used to seeing $61 profit and thinking, right, that's it, it's time to take it off, then when it gets up to 400 or 500, you're going to be twitching, even though you've scaled up significantly so that your account size is now that. So that's what I say about these big numbers, take a lot of getting used to. So if you ever see big numbers, just scale them down to where you are right now. So if you've got a 13,000 account, read down to 61, 13, 90, and 228, okay? Just to put it into context, all right? And that's really important. And as you scale, often worth trading a demo account accordingly to sort of scale up, follow the trade you're doing on your live account. Now this is there's another key point here. Okay, so we're using a trail here. We're looking for a close below the 10 EMA from a trade that was entered here on this, so we can leave this alone and not worry about it and just see it sort of move its way up. Now, there's a big difference in the sizing of this, even though it's 3 NASDAQ contracts, which might sound a lot to some of you who are just starting your trading journey. It's a lot different in size to, so this is essentially a 400, if you look at that 400 times 117. So we've actually got, if you look up here, there we go, there's another APT. So we've actually got 1,000 or 900 APT at 116, okay? So do the maths on that in terms of the size of the position versus the size of the NASDAQ position. So you can see there's a much higher position size. So this is what I mean about scaling. When you do a new strategy and you start to, even when you're starting to scale, when you do a new strategy, you start lower. So this is a high intensity, low time frame index trading. Particular times of the day would suit me and what's going on in my world, and therefore now I'm quite happy to. I'm actually going to put a trail stop here while I talk to you guys. I should have done that before, but I'm going to move this up to 14,121 on that. Okay, so well, actually, there we go, 10 EMA. So that's locked in about 97 bucks. So we're quite happy to leave that now. I should have done that before I started with you guys. So that would have been a trading error if that had actually been, even though I knew where my stop was, because I wasn't watching it, I should have actually placed a trade there. Okay, so I hope that's been useful, just to sort of put a few things into context. No worries at all, Ross. Peter, that's great. I'm really glad that looking at the different sizing of the numbers has helped. I'm delighted that was really the intention of that. Okay. Trading journals. So what can a trading journal do for my trading? Well, look, I think you got rocks in your head unless you have a trading journal. Now, that doesn't mean you have to do it ad infinitum, but So the process that a lot of people use is they'll do it for a period of time until they've got a critical mass of results, they can make some decisions. On top of that, they'll obviously be keeping an eye on those key numbers, and then a summary spreadsheet of and I'll maybe cover this next time because it was something I was talking to somebody about today, about the usefulness of keeping a summary spreadsheet of what your trades have done, what strategy you use, what exit trigger you're using, because we can do some sorting later, which is really useful. I'll see if I can put something together that's going to help for the next session on Thursday. Yes, absolutely, Leanne. So, journaling, why you do it? Well, look, first question is, how am I performing within your system? If you don't trade your system religiously, you can't make a judgment on whether your system's working or not. It's really that easy. And then you're asking the question, well, how was my system performing in the market? And at a more micro level, how are my particular strategies performing within different markets? And so when we talk about, and this is one of the hard nuts to crack, really one of the hard nuts to crack is making that assessment of market conditions. And whether you're trading an EA and you're trying to determine your switch on, switch off, your on and off switches for your EA, or whether you're trading particular strategies or particular position sizes, you're trying to make a judgment on that, trying to make something objective that you put together. Maybe I should do it in the circle where we actually try to do that, actually do it live. I'll take the thinker that I've got and we'll actually try and do it together. Maybe that would be a really cool thing to do. Anyway, thinking out loud. So lots of things we can do about how your system's performing, and then how can I improve my performance outcomes? Because obviously there's no point in measuring just for measuring's sake. We want to actually use that, feed that back into the trading system we're using, as I sort of mentioned before. So it is, without doubt, the most effective way to create a more robust, individually suited trading system. And it is the most effective way to highlight common errors that you need to be addressed, either personal or system errors, to optimize your behavior and potentially your results. Unless you measure what you're doing, you can't tell. You're using the force or some of the natural power to do it. It's really simple. And yet, if I ask the question, how many of you keep a journal? And I don't think I put this in a poll. I meant to put it in there as a poll just to get a feel for it. No, I didn't. Maybe I'll do that next time. Okay, so levels of management. There are various levels you can measure things at. Obviously, we can focus on evaluation of results, which are what you see when you open your platform. You see your margin usage, you see your account value, you see your profit loss, your current trades. So that's level one measurement. Level two is really when we start to look at evaluation of processes and the systems that we're using. So that, of course, is our plan, whether we stick to it or not. And then we can start to evaluate indicators and judgments of progress. As I said before, start to measure things like learning progress, like system developments or systems that we have in place versus systems we don't, all that sort of stuff. And then level three is really focusing on if you're really taking your training business to the next level and you're doing nothing else but that, then you can start to look at them more. Or if you're moving towards there, then things like training time audits are going to help. You can look at strategy selection versus market conditions, which we've done in the circle sessions on before. Even strategy selection versus timeframes, timeframes versus market conditions, which again, we've had a session on before. But really, this should be the minimum measurement that you're doing. And we've showed you this before. I'll leave that up for a minute or two just so you can copy it. Whether you're doing, whether you're on traderiq.com.au or whether you're on Go Trade Academy or Go Markets doing one of the courses there, you can download this pretty easily. And as well as that, the journal template, which I'm happy to show you at some stage. Good. Lots of yes, I have a journal now. I guess you're sick of me banging on about it, eh? Yeah, look, absolutely. I think there's massive, we might do this next time, we might do this on Thursday. There's a little scale trying to develop in terms of your confidence. If confidence is such a critical part of whether you, such an integral part of you being successful as a trader, then ultimately, Actually, I was doing some work on this the other day. I wonder if it's still open. Yes, it is. Oh, look at that. Okay, so so I've just actually completed a module for the Trader IQ course, and this is one of the things that you get. So as I said, we measure self-confidence or self-efficacy, as we call it. So what I did is I come up with a sort of a measuring system that you could say where you are now. So there's really confidence in knowledge, and there's what we call mastery experiences, which are things that you can draw on that you've achieved before relating to your trading, that you can in terms of market interpretation, in terms of development systems, and of course your emotional decision making. So there's little things like that that are really sort of quite useful to measure in terms of where you are now. Prefer an Excel? Oh, well, you've got an Excel here. If you prefer to use an exercise book rather than Excel, that's all good. If you use a spreadsheet, the nice thing about a spreadsheet is you can just I need to find it. Let me just give me a second. I thought most of you had this, but some of you probably haven't. Thinking about it. Give me a second. There we go. So here we go. Okay, if you look in handouts again, because I'm a really nice bloke sometimes, even though I might come across as being a bit harsh and firm, you'll see this journal template, which you can download. It'll come up in a second. Come on. There we go. So there you go. There's an example journal sheet. So you're measuring what you're entering, why you're entering it. So the entry details, what your reason is for entry. So that's the strategy you're using, what your exit plan is, what happened during the trade, and then some exit stuff and some reflections. So there you go. I hope that helps a little bit for those of you who are newer to journaling. Yeah, so put your own little spin on that and use whatever. If it's useful, then that's fantastic. If absolutely. Okay, all good. So, as I said, it's often better for a fixed period of time with a specific purpose. So you're recording your trades. Arguably, I mean, there's a lot of people who, once they get into journaling, it doesn't become a chore anymore. They develop systems around recording that. And Ross, I know, who's on this session, he puts his trade information on, uses his voice memo on his phone, and then sort of uses that to fill out his journal when he's got a little more time, space, and isn't disturbed. It's really important you close the circle. If you don't close the circle and feed it back into your plan, then it becomes, or into your behavioral plan, it becomes there's no purpose or impact to it, so it's pointless. And then, of course, repeat a set date. So this is, of course, how it works. Just to sort of tie it all together. So we plan our flag, we trade religiously, we journal until we reach a critical mass of trades, and then we test alternatives. And that can be related to our plan or our behavior, depending on what we're working on. And then, of course, subsequently, we see what our results are of system one. So let's say we're get rid of that stuff. So at this stage, our stop losses up here. Should really shift it up there. There we go. But this is us using a 10 EMA now. We've had this big spike up, okay? But we could equally use the MACD signal line. So we're watching the MACD there. If that signal line pops above the histogram, then we know it's time to get out. And you can see through the life of that trade, it hasn't. We actually entered this before it was above the zero line. So, but once it has come up with the zero line, we can subsequently use that. So I've got this system or this system, we need to decide which is right for us, and then away we go accordingly. This looks as though it might just stop around that 14,135 level. So if we get another dip down and another dip up, I'll just rip that off. But I remember this morning I said, watch this later on after European market open. It's taken a little while to cook. There's our 30-minute chart. So really, I think this was market open in Europe, but really since then it's popped up and continued to do so. Next key levels here at 14,152 on the longer time frame. But as I said, this is what we're trading, so we're trying a new system on this. Okay. Absolutely. Right. Wrong way. There we go. So look, what I tried to do today was absolutely smash home the importance of measurement, and it is. I can't stress it enough. It's in terms of where you are now to where you want to be, and really everything that you've done before is feedback that's brought you to the place where you are now. The results you're getting right now are as a direct consequence of that very first slide about how trading results occur. If you subscribe to that as an idea, then really it makes sense that you tighten those things up and then you measure the impact of all of those things on your results. Tweak them as you need to, create that individual system that works for you, and then that puts you in the best place to move forward. So look, if you've not journaled before, give it a shot, give it a try, give it a fair whack, and see if it does create anything interesting for you. Now, a number of people find that even by doing that, it creates some accountability, which wouldn't otherwise be there unless you had someone like me banging on at you as a coach. But journaling itself means I'm actually taking this sufficiently seriously to measure what I'm doing and see what I can do to make those results better. Give it a try for even 1 month and see what happens. Plug those not only your 4 key numbers, but also your win-loss ratio and your average win, average loss. Make sure you know what those are. Okay. Now on Thursday we're going to talk through things in a little more detail, and then take it forward. As I said, my intention is not to promote the Trader IQ thing. I'm just using some stuff from it. So it is traderiq.com.au if you want to have a look. There's I think there's an ebook to download there if you want to have a look at it. That would be grand. Somebody's writing a book on this. Absolutely. Yeah, Ross, it's in the pipeline actually. I'm actually sort of looking at transcribing some of the webinars that I've done, of which there have been, when I think about it, we've got all these intermediate trader clinics, and then we've got Inner Circle every week for the last 2 and a bit years. So I'm actually sort of trying to pick out the key presentations and maybe see what can happen with that in terms of putting something a little more solid together that people can have a look at. Might be fun. All good. Well, look, guys, thank you very much. All your comments and your questions have been fantastic. I hope that's just giving you a little nudge in a nurturing sort of firm way in terms of the importance of what we're doing measuring. Now on Thursday, as I said, we're going to get into a little more detail, perhaps look at some of those finer measuring points that we talked about, maybe a bit more on what those key numbers can mean in terms of your win-loss ratio, your average win, average loss, what that might intimate that you perhaps need to work on next. And also be there if you can make it along. If you can't make it tomorrow night, pop me an email in terms of getting the recording. You can see if you can watch it before. When we talk preventative versus promotional bias, it's really important, and it's one of the things we tend to pick up when we're doing this sort of thing. And there's a couple of things around that I think are going to help some of you move forward. So that's it. Alison, you're so welcome as always. Alyssa, great to see you here as always. Welcome, Andrew. Great stuff, Ewan. Thanks, buddy. Fantastic, Rachel. Let me know how you go with that. It'd be really interesting to see how you hear how you get on. Great stuff. See you, Stephen. Robert. Cheers, Ross. Talk to you soon, mate. Thanks, David. Thanks, Wayne. Cheers, Dean. Good stuff, Stephen. Take care, guys. Enjoy the rest of your evening. And Cameron, good that we reinforce some key issues there. Sometimes it does no harm to get reminded. We'll take it to the next level on Thursday. See you later, guys. Trade safe. Bye-bye for now.